If one steps back from the craziness, Wilfred, I think one can assume that the businessman Donald Trump won't go ahead and try to destroy, the business prospects for the United States or the world, for that matter, as the markets were predicting, several hours ago. So I think the snapback makes some sense. Your lead-in a little bit ago was, I think, more to the point. I think the danger point here is not so much the stock market, but it's the bond market.
And is that how you explain what's happening right now? You're seeing a sell-off that's pushing yields into the 190s.
Yeah, exactly, Sarah. So what you end up with is maybe some of the things that Trump was talking about. We're in unprecedented times, right? So maybe some of the things he was talking about in the campaign, he'll actually do, which is very different than most politicians. And if that is infrastructure and economics, if he actually does follow through with that, and he has the House and the Senate to back him up, we could end up with a little bit of inflation, which means that in the bond market, you got some real carnage.
How much money are you overseeing these days, Mike?
Over $5 billion.
So someone overseeing over $5 billion, how much of that is U.S. assets?
Over half.
Do you look at that? Do you make changes? Do you reassess it?
As a result of this, no. I think what's possible is we have a global populism explosion that's going on. It's reflected in the U.S. now, but we had it in Brexit before, and we're going to get it in Poland and Italy. We're going to get it all over the world. I think it's possible that some of this will unleash some better free enterprise possibilities for people like Trump to take advantage of for companies. So that could happen in the emerging markets as well. The Czech Republic could do very well.
Brad, what buying opportunities are you seeing this morning?
Well, I think you certainly have to bet on deregulation, which you have to bet on a greater interest rate spread, both of which are good for financials. I think any heavily regulated industry is potentially poised to do better. If you look at healthcare, for example, much of the downward pressure there has been from fears of regulation from the Clinton administration, and there may well be a bounce back there.
And Brad, this volatility, is it going to be literally a 12-hour thing? Are we now going to just tread water until we get to the inauguration, or is there immediate volatility to come?
I think there might be more volatility. Markets tend to react, pull back. Now there's going to be enormous pressure on Mr. Trump to say, okay, what exactly did you mean about trade? What exactly did you mean about the U.S. debt? In other words, the markets reacted and said, oh my God, it's the end of the world. And now we're saying, well, okay, we're going to pull back a bit, but we need some more clarity. What happens in the next couple of days is going to depend significantly on what Mr. Trump can do with that, and also on how he elects to work with the Republican Congress, because that's going to be a much bigger challenge than the election was, frankly.
So as a rattled investor, Mike, what do you need to hear? Well, not you, but there are many of them out there this morning. What do you need to hear from President-elect Trump to calm some of your concerns, or that would make you think twice about this market?
He started out very well with his acceptance speech, Sarah. I think he talked about uniting the country. I want to hear, I think that's a wonderful word called realpolitik, which I can never say correctly, but common sense is what I hope to hear from him, that he's going to do smart things he said he's going to do smart things and we'll see within the next couple of months. If I presume he's going to follow through and things will be okay. That's my guess. Things are going to be okay.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.